So I'm just going to go ahead and read Courtney's bio, and then I'm going to hand it on over to her. And before I do that, I'm just going to remind everyone that's on a phone to please mute yourself, because when you make noises in your room, we can see you, and we want to see Courtney is who we want to see. So go ahead and mute yourself. Take a moment to do that right now as I read Courtney's bio. So Courtney is an author of the book, More Relaxing, Less Taxing, and an international speaker. She owns a full-service accounting firm in Greenville, South Carolina. She has owned her own practice for 17 years and works with clients in all 50 states. Her experience is in public and cost accounting, providing clients with tax preparation, tax planning, income tax accounting, and consulting services to better run a business. With years of experience, she has developed advanced technical skills in a wide array of tax and accounting areas and has served clients from startup businesses to multi-million-dollar companies. Courtney has worked with companies that span across a range of industries and sizes. She has developed a broad expertise of industries, including trucking, doctor's offices, real estate, construction, convention companies, and others, as well as home-based and network marketing businesses. So please, everyone, mute your phones and silently join me in giving a warm welcome to Courtney Epps.
I was going to say hot water, but I'm like, maybe a cold water. You know,
I think somebody has.
You're welcome. I know. If someone knows Chris, can you please tell her to mute her line?
Yeah, there you go. That's funny. Yeah.
Oh, goodness.
Yeah,
Chris,
yeah.
you're killing me.
She's so. I can't.
Chris.
I know, Chris. Hold on one second. I'm going to pause the recording. Okay. And we're on.
Great. Hey guys, I am excited to share with you today, and I'm actually just going to do the same exact presentation, if that's okay with you, to just go through it, because that's the easiest way that I can give the information to you. And I want to make sure I give you every bit of information that I can give in order to help you not only save money in taxes, but to also be able to share this same exact information with your friends and family, so they can have a more relaxing and less taxing life. So she gave you some information about me. I want to just kind of tell you a little bit more detail. I want to go backwards. Yes, I'm an author. Yes, I'm a speaker. I'm a mom of 6. That's probably one of my greatest things that I've done is I've 6 wonderful children. They range from 17 to 6. And I think somebody else is still on.
I'm listening to a tax person talk about home-based business.
Okay, we're in the middle of the call. Can you please mute yourself?
It's a live call tonight on Juice Plus stuff.
Goodness. Sorry, Courtney.
Were you sleeping?
You guys are good. You guys are good.
All right, hold on a second.
Let's see if we can find
okay. I'm gonna listen to this. It's be about a half hour.
Okay.
Good. All right, we got it. So this is good because I have done 14 tax strategy sessions today, so I needed some excitement in my life today. So I'm a mom of 6. I'm a wife. My husband, Brandon, and I run OTB Tax together. I currently live in Greenville, South Carolina. I love to talk, unlike most accountants, which is the reason why we have been so successful, because I just love to educate people on how to free up money and save money in taxes. Because if you did not know, you spend more on taxes than food, clothing, transportation, and housing combined. And if you're a W-2 employee. So that, sadly enough, I'll share with you why you don't want to just be a W-2 employee. And I hope everyone on this call, at least has some sort of home-based business, and I'm sure that you do. So I own an accounting firm in Greenville, South Carolina. We have 17 employees currently. We're just releasing a 4,000 square foot building that we're moving into in the next couple weeks. Super excited about that. And then we handle clients in all 50 states. So I'm going to throw a lot at you today, and it's going to be like a fire hose because I do it so fast. but I want you to know that we can help you implement a lot of this stuff. And moving forward, if you want to hire us, you obviously can do that, or you can take the information and utilize that to save you some money along the way. So why I'm so passionate about the network marketing industry, I used to be in the network marketing industry. I actually got involved because someone asked me to do a tax return in a company. I did the tax return. I saved them $4,100 more than they'd ever gotten back on their taxes before, because the year before they were a W-2 employee, and then they turned into a W-2 employee with a home-based business. That was my big aha moment, to show up to a network marketing event with about 600 people, because I wanted to get more tax clients. And so I didn't understand network marketing. I was always told that it was not a legitimate business. And, you know, I realized for myself that that's not the case. And so everything that I learned about building a business legitimately, I learned through the network marketing industry in the last 5 years. And it's super exciting for me because, one, I learned what personal growth and development was in this industry, and that changed my life completely. And in the last 5 years, through the sheer marketing with network marketers, my business has grown over 20 times. So I love it. And I preach, I live, sleep, and breathe home-based business, because I've owned a home-based business for the last, 18 years now. And, I love what we're doing here. So, I'm going to show you why everybody should be in a network marketing in the network marketing industry, building some sort of business. And the reason why is because they're overpaying in taxes by $4,000 to $8,000 a year. Yesterday I got really angry because I saw that the FTC was suing yet another network marketing company for it to be considered a pyramid scheme. And sadly enough, people have no understanding that every real estate agency, every insurance agency, runs and operates off the exact same industry standard and model. And so I posted and said, people don't get it. The government has done a really good job of teaching us why we shouldn't be in the network marketing industry. And the reason why is because if every household in America had a home-based business, it would literally cost the IRS $508 billion a year. So I'm very adamant about teaching this. And I want you to understand that there are two tax systems in our country. One is for the W-2 employee, and which is a salaried employee. That system was created to take your wealth away. And if you're just a W-2 employee, you've got to figure out a way how to get into the second system, which is for a business owner. So that category in that tax system was created to provide and create wealth for you. See, business owners create income, and so they create economy. They hire employees, and those employees then pay taxes. So we get massive tax breaks by being a business owner, and it doesn't matter if you're a mom and pop. It doesn't matter if you are a startup, home-based business, or if you're Walmart, Costco, Sam's, Target, any of those, Amazon. You have the same exact laws as all the big companies. You just have to know how to access those. And the difference between you and Amazon is that they are full of tax strategists, CPAs, and tax attorneys who do nothing on a daily basis but try to find them ways to save money in taxes. So that's why I believe that you would be brain dead not to own a business. And I every day help people attract people into the network marketing industry. I help them keep them around long enough to win. And then when they actually win, I help them keep more of their hard-earned money. I also work alongside speakers, coaches, and trainers, and I free up money so that they can utilize the programs that they're selling, because I feel like continuing education and personal development has changed my life, and everybody should be involved in it. So that being said, this industry is for everyone. The reason why this is so important is that 46% of Americans don't have an extra $400 to their name, and 69% of Americans don't have an extra $1,000 to their name. So what that means is that half the people that you're sitting down with, almost half, don't have an extra $400 if their tire goes flat. So you have got to be that one to share with them a way that they can make not only an extra stream of income, but also a way that they can free up that money. What I have found is that the number one thing that you can spend your money on is figuring out ways to save money in taxes, because on average, W-2 employees pay 40% of every dollar that they make in taxes. And I'll break it down for you. The average household in America makes about $60,000 a year. That's average. Now, I'm showing you single and married, and there's no business expenses for W-2 employees, because W-2 employees don't have access to business deductions anymore. They took away that tax law. So they have the standard deduction or the itemized deduction. Now, here's the taxable income. So the $60,000 is income. The taxable income is now $48,000. So that's what you'd pay taxes on. And then here's the taxes. So if you're single, you're going to pay almost $14,000 in taxes. If you're married, you're going to pay almost $11,000 in taxes throughout the year. This leaves you with your take home. The cost of living in America on average is $53,000 a year. I lowered that sum just for single, and that leaves nothing left over. So people that you're sitting down with, don't get involved, because they cannot even fathom how on earth they're going to come up with the money on a monthly basis to stay involved in something when they're going in debt. And they cannot even figure out why they're going in debt, because the money's being taken out of their paycheck before they even get a chance to spend it. And so sadly enough, in this country, we have a massive epidemic. And I feel like our government is doing a really good job of teaching people how they have to go go to school, get good grades, and go get a good job. When, guys, I'm not going in debt. I'm not working and going in debt every single day of my life to work 40 hours a week, 50 weeks a year to take 2 weeks paid vacation. But people don't know this information, so they're just getting stuck in that vicious cycle. So here's what happens. The minute you decide, hey, I want to be in business for myself, now you have tax deductions from that. So let's look at that. What happens when you have a tax deduction? So a tax deduction in the network marketing industry is anything that you can attempt to earn an income off of. So if you're attempting to earn an income either today or in the future, and it's reasonable. Now, what is reasonable? That would mean what you believe is reasonable. I spend $85,000 a year being a platinum partner with Tony Robbins. I know that's reasonable for what I'm doing, because I'm not only utilizing that for marketing, but I'm also utilizing that for continuing education to grow my business. So I want to be where the top 1%ers are, so that I can learn from those people and they can help me grow my business. So, that's reasonable for me. So what's reasonable for you may not be the same as what's reasonable for someone else. But as long as you're attempting to earn an income either today or in the future, then things become tax deductible. So here's what happens, and I just explained that. This is the IRS terms. Any expenses incurred for the purpose of gaining or producing income is incurred with a reasonable expectation of resulting in future business, and is reasonable under circumstances, is tax deductible. So I just broke that down. If you're attempting to earn income today or in the future and it's reasonable, is tax deductible. So what I do is I teach people how to redirect what they're currently spending today, which I call living expenses, and how to turn those into business expenses by doing something called daily business building activities. And daily business building activities is just attempting to earn income. And in the network marketing industry, that's just opening your mouth and telling people what you're doing. And guys, I will tell you all day long, accounting, taxes, that's hard. Running an office with 17 people, that is hard. Making sure that 700 people get their tax returns done this year, that is hard. Opening your mouth and telling someone something that could possibly not only change their life forever, that could save them $4,000 to $8,000 a year in taxes, but then also can financially change their life and their health on top of that, that is not hard. You just got to be willing to open your mouth and share, and the sheer intent of you attempting to earn an income now becomes a tax deduction for you. So here's living expenses. So all W-2 employees have living expenses and itemized deductions. And so Itemized deductions, we all know you get to either take a standard deduction in this country of $24,000 if you're married, $12,000 if you're single, or you get to take itemized deductions. What most people don't know is that 96% of Americans never get to take any itemized deductions because they don't exceed the $24,000 limit. So medical bills, most people don't realize that you have to go above 7.5% of your AGI in order to even get a benefit for medical bills. So that means if you made $100,000 a year, 7.5% of that would be $7,500. That means you would need to make more than have more than $7,500 worth of medical bills to even get $1 in a deduction. So if you had $8,000 worth of medical bills, guess what? You're getting $500 in the deduction extra. Medical insurance, you can write that off 100%, but again, that falls into the whole 7.5% AGI. You get to write off taxes, property taxes, real estate taxes, sales tax, and also income tax. But the cap is $10,000. So you don't get any more. If you had $40,000 worth of taxes this year, you'd only get $10,000 that you'd be able to write off. The next one is charitable contributions. Yes, you can write off charitable contributions, but there's also limits to those. So we have living expenses as well, which are things like meals and auto expenses, cell phone, travel, internet. But if you're a W-2 employee, you get no benefit from these. And it used to be in 2018 or prior to 2018, if you had a W-2 income, you had expenses such as these, you could write those off, but you can't do that anymore. So now we get into the business owner category. They don't look much different, guys. It's just the things that are over here on the left now are tax deductible when we move over to become a business owner. So medical bills, you can actually hire your spouse. Your spouse can pay 100% of the medical bills. Then you in turn reimburse him through what's called an HRA. And by doing so, that's 100% tax deductible on your business as a business expense. So what most people don't understand is that I get itemized deductions and I get business expenses because I'm a business owner. Huge, huge difference. Now, the next step is medical insurance. Medical insurance is 100% tax deductible if you own a home-based business or a business. Either one, it does not matter. Property taxes. This could be like things like you buy an RV and you go run around the country and see your team or sign up people in your company or, prospect. That could be tax deductible. It also could be auto taxes that you can write off. Then business use of your home. I love talking about this. So up until a month ago, I owned a business in my home forever. And, we had 11 employees working out of our home. It got kind of crazy. So we had to move into an office. And, for the last 2 weeks, I've actually had to work in this office and I've not been happy about it because I love working from home. So we still have a home office. We still have employees that work there because my children and my spouse are my employees and they work from our home. And because of that, we get to write off a portion of our house. Almost 40% of our house is tax deductible. On business use of your home, you can write off your utilities, your repairs and maintenance. You can write off your interest on your home, your mortgage interest. You can write off your taxes. You can also depreciate your home. And I have so many people tell me, well, Courtney, I've been told that you shouldn't depreciate your home because you'd have to pay taxes on it later. No, that's not true, because you have a capital gain up to $500,000 if you own your home more than 2 out of 5 years. So, you're more than likely never going to have to pay taxes on any of the money that you get to claim as a depreciation. So charitable contributions, yet another one. I love charitable contributions because the way that I give, and I'll show you in just a minute, is from a gross income level instead of a net income level. And because of that, you could do it for every product that you sell. You could do it for every customer that joins your team that you're giving something. It could be for this pen. So if I sold this pen, then every time I sold a pen, I could give something. Every time I sold a service, I could give something. By doing so, that becomes your model and it becomes 100% tax deductible as a business expense instead of a charitable contribution. So all of these guys, you can see These are all the same deductions. The thing is that now we actually get to maximize them because we can take the standard deduction plus these expenses as a business expense. Next thing, see, I get super excited because I am going to go see my friends anyway. I'm going to have conversations with my family anyway. Why wouldn't I pick up the phone and call them and say, hey, let's go to lunch. I want to share with you something that I'm doing. Once I get in my car and I drive to my friend, I get to write off 58 cents a mile. So let's say I had 20 miles and I drive 58 cents a mile. So I get to write off 20 times 58 cents. I can also take actual expenses, and I'll talk to you about that in just a second. But, you know, I'm going to write off my miles. Now I'm going to get to lunch and I'm going to have a conversation with them and tell them what I'm doing. I'm going to write off half of my meal. Now from here, my friend could say, you know what, Courtney, I think you're crazy, or I love what you're doing. Or they could say, you know what, I think you're going to hell, I think you're going to jail, or I think this is a pyramid scheme. But it's irrelevant, because the thing is I want you to understand is that you are more educated than your friend is, because your friend does not understand the benefits of having a home-based business. So instead of attacking them or coming back at them at something crazy, then I want you to just say, you don't comprehend the fact that I'm saving $4,000 to $8,000 a year on my taxes, and I'm trying to show you a way to do that as well. And then your friend is going to be like, what did they just say? Like, I don't even comprehend that. So, you know, I would tell my friend, and I don't expect you to go through this whole spiel, but I'm going to break it down for you. So I'm going to tell my friend, so look, I got in my car, I drove to you, I got to write off 58 cents a mile on my taxes. I sat down to have a conversation with you and I got to write off half of my meal. I'm going to get back in my car and I'm going to drive back to my house and I'm going to get to write off 58 cents a mile. When I get to my home, I'm going to get to write off a portion of my house because I operate my business out of my home. Then my swimming pool that I'm going to get into, because it is a tax deduction now, it's a fringe benefit because my employees, who are my children and my spouse, are allowed to swim in my swimming pool. So now that $46,000 swimming pool is now a tax deduction. And then on top of that, I get to write off my cell phone because I called you on it. I get to write off my internet because I needed it to run my business. This new laptop that I got in front of me, that's a tax deduction because I have to use it to run my business as well. And then on top of that, I get to write off my travel. So when I get to go on vacations, I'm going on vacations with friends that are also in business with me. And because we're going in the same place, in the same direction, and we're having conversations about our business, that now becomes a tax deduction. And then guess what? I hired my children. I have 6 children. I pay them to work for me. I'm going to pay them anyway. I'm going to pay for their stuff anyway. So I paid them to work for me. And now I'm not paying $72,000 as my tax deduction on paying my children to work for me. So that's saving me $28,000 in taxes this year. So what happens is your friend, and I don't expect you to tell them all this stuff, but if you just give them a couple things, guys, it makes them realize that what they're doing may not be the best. And what you're doing is the smartest decision that you could ever possibly make. Because at the end of the day, all of these things that your friend is already paying for, you now get them as a tax deduction because you spent $50 to be in a home-based business and you're attempting to share that information with someone. It's crazy. So if you understand the massive tax benefits of being in a home-based business, you will stay in for the tax benefits. You will stay in long enough to share the information with someone, and you will eventually win because it is just the right thing to do. It's the smart thing to do. So hiring your kids, I'll go into detail on that in just a second, but I want to get back to the travel. See, the thing is, if you travel, and I take my kids with me, I take at least one child with me to every single event that I go to. I'm leaving Wednesday, and I'm taking all 3 of my boys to UPW, which is Unleash the Power Within with Tony Robbins. So we're going to go see him. And, you know, I do that at every event. So I'll take them with me. They're not only getting the personal growth and development that I want them to have, but then they're also working for me. So they're helping me build a business. So I get to write off all the tax deductions around it. And what I'll do with continuing education events is I'll typically go in a couple days on the front end or a couple days on the back end. We'll make that into a vacation. So virtually everything we're doing is tax deductible. Hiring your kids, I'll talk about that in just a second. Office supplies and legal and professional fees. So office supplies, That could be your laptop. That could be a printer, a copier, you know, a presentation or a projector. All those things are tax deductible. And then I always forget to add me. So the things that I'm sharing with you today, like tax strategy sessions or our membership or tax preparation, when you're in business, those things become tax deductible. Now, the next thing, these are extra costs. So you may not currently have, if you are just a W-2 employee, you're not going to have advertising. So that does get added on. Continuing education, I believe everyone should have personal growth and development and continuing education. So that may be not be an expense that you have right now. Then you have dues, which are, you know, like your monthly dues that you would have or annual dues that you have for your business. And then you have cost of goods sold. Everybody spends money on products. Whether or not those products are tax deductible or not is dependent upon if you're building a business and trying to create a brand. So I tell people every day, I don't know how you can sell products if you're not utilizing those products. So that to me would be a cost of goods sold item. And then you have your samples that you're sharing with people as well. So that becomes tax deductible. So the total that I just went through is $35,000. Now, this is averages that I see. This is not minimums or maximum expenses that you can take. These are just kind of averages that I see on a daily basis. And the total expenses here is about $35,000. And out of the total, you can see that the extra expenses are only about $3,400. And those are expenses that you don't necessarily have to have in order to build a network marketing business. But here's what happens. I'm not even going to use the $35,000 because I think it's too high for people to even comprehend. But what I want to do is use $25,000 in business expenses. So we made the same income, the $60,000. This is based upon you not making any income in your network marketing business, although you've actually attempted to earn income. We've got our standard deduction. Here's our taxable income. Here's the taxes, the take home, the cost of living. And now what's left over is we actually have money left over. So that's $5,600 a year, and you haven't made a dollar in the network marketing industry. So it's super funny. I have people tell me all the time, oh, I lost money in the network marketing industry. That's great on paper. If you're losing money in the network marketing industry on paper on your tax return, that means that you're paying less money in taxes. But at the end of the day, if you're getting amazing products and you're getting amazing continuing education and you stay in long enough, you will win. So if you're married, that's almost $5,000 a year. And see, here's the thing, guys. The equivalent in the tax savings, you'd have to make $3.79 per hour if you're single for the 2,000 hours that you work as a W-2 employee to be equivalent to the tax savings of owning a home-based business. And if you're married, it's $3.05 an hour. So what if you actually slipped up and started making money? Because that happens every single day. And you could suck at network marketing. It could be like you could really be bad at it. But the thing is if you attempt long enough, you'll find somebody and they will actually go out and share it for you. So let's just say you made an extra $500 a month. And so we have the same income, the business, or we have a little bit more income, $6,000 a year. The business expenses, the standard deduction, at the end of the day, you're left with the difference of $10,500. And if you're married, that's $9,500. So you'd have to make almost $7 an hour to be equivalent. To make an extra $500 a month would be equivalent to $7 an hour pay increase. That's crazy, guys. So I want to leave you, this is an example that I want to give you. I had someone come to my office. We have so many people, and I'm not in network marketing. Again, I stopped building network marketing about 2.5 years ago. I do nothing but promote network marketing because I think it is the way for the average W-2 employee to start something on a part-time basis and grow into a full-time career and walk away from their W-2 income. But what I want to share with you is I had someone come into my office. They'd gotten a $35,000 a year pay increase. The husband made $85,000 a year. The wife made $55,000 a year. So that combined, it was $140,000 that they were going to make this coming up year. And they wanted to know how much in taxes it was going to cost them because they'd gotten a $35,000 increase this year in pay. we determined that they were only going to get 13,000 of that 35,000 because 22,000 of it was going to be going to taxes, because what it did is it put them in a higher tax bracket. So while they were there, and they were like flabbergasted, while they were in my office, they wanted to know, or I said, you know what if one of you stopped working? And we just took that $85,000 a year and we took away the $55,000 a year. What would that do? What would that look like? And we determined that the $55,000 a year was only generating an additional $1,800 a month, which was only $21,000 a year. Do you hear me? $55,000 was only giving them an extra $1,800 a month. They were paying $34,000 extra in taxes because of the tax increase. So going from a one income earner household to two cost them $34,000 a year. So I told them, I said, you would be better off to stay at home, make $1,000 a month in a network marketing company than you would even going out and trying to get your $55,000 a year paycheck. See, the thing, guys, is most people in this country believe if they're not making enough money, I'm gonna go get a second job, I'm gonna work overtime. All you're doing is putting yourself in a higher tax bracket. It's crazy. You've got to figure out a way how to decrease those taxes, and this is how you do that. So going into detail on the mileage, you can either take the standard mileage rate, which is 58 cents a mile, which I talked about earlier, or you can do something called actual expenses. So here, let's just say you had 15,000 miles this year on your car, you would be able to drive 58 cents a mile. That would be an $8,700 tax deduction. You cannot claim gas, oil changes, or repairs, and you cannot depreciate the car. You can only take the mileage. This used to be a great idea until the new tax laws changed in 2018. And so if you bought a vehicle after 2018, January 1st of 2018, it's almost always better to do actual expenses. If you bought the car prior, then it's typically better to do mileage at 58 cents a mile. So, and here's why. So business use percentage or actual expenses, we have to first determine the business usage, and that would be the business mileage divided by the total miles. So if you had 8,000 business miles divided by 10,000 total miles, now you're at 80% business usage. So if you had, we're going to track all of our expenses, gas, oil changes, repairs, supplies, interest on your car, car washes, and you multiply that total by your business use percentage. So let's just say there was $12,000 in actual expenses. You have 80% of that is used for business. So now you have a $9,600 deduction. But on top of that, you get to depreciate the car because we bought a new car. So it used to take 18 years to write off a $50,000 BMW. Today, with the new tax laws, you can actually write it off 3 times faster, and it would take about 5.3 years in order to write off a $50,000 BMW. And the great part is, so I'll just explain, you know, in December of 2017, we had some massive mold exposure a couple years ago. 2 years ago, October 2017, we lost everything that we owned. We had to buy new cars, new clothes, new house, new furniture. It was nuts. So December 2017, we bought 2 new cars. And one was a Suburban, which is 6,000 gross vehicle weight. And I'll talk about why that's important in a second. The other was a BMW. So the sad part is nobody told me that the tax laws were going to change January of 2018. So we bought these new cars. And so in the BMW, we were able to write off for 2017, $11,160. Well, in 2018, the second year, you can see on here, we can only write off $5,100. And if I keep that same car this year, I can only write off a $3,000 deduction on my BMW, which is absurd. Now, the Suburban works a little different because the Suburban weighs more than 6,000 gross vehicle weight. So we were actually able to write off 100% of that vehicle in the first year that we bought it, up to our net income, which is a huge, huge deal. But now that puts me in a predicament that I need to buy a new car to replace my BMW, because if you look at it, is the first year that you have a new car after January 1st, 2018, the first year you get a $10,000 deduction. The second year you get a $16,000 deduction. So I can either take a $10,000 deduction this year on a new car, or, and it doesn't have to be new to me, it just has to be new. It doesn't have to be new, it just has to be new to me. So I can buy a car this year, get a $10,000 deduction as opposed to the $3,000 that I would have gotten off the BMW. So that leads me to the fact that I need to go buy a Tesla. And so if any of y'all on here are thinking about the fact that you need a Tesla in your garage, I'm going to explain to you why I feel like a Tesla is the most beneficial for me. Sadly, me and my husband went and test drove one a couple weeks ago, and his legs are too long to fit in the Tesla because he's 6'3". So if you have husbands that are tall, I don't know how in the world he's going to fit. So we're having this argument on the Tesla, but here's why you need the Tesla. So it has no gas, so it saves money in gas. So that's a big deal. $300-400 a month. It's 100% deductible in the first year if you buy the Tesla Model X. And the reason why is because it's over 6,000 gross vehicle weight. So that's a thing when you buy a vehicle that weighs more than 6,000 pounds, which is gross vehicle weight is what it's called, then you can write off 100% of that vehicle in the first year that you buy it. So that's $106,000 tax deduction that I would be entitled to this year by buying a Tesla. Next up, $3,750 electric car credit. That goes away after this year. So all electric cars this year have some sort of electric car credit. This one happens to be $3,750. It drives itself so I can work. So what better way of, I need a car that drives itself so I can work more. So that saves me time and it saves me money. Then I'll get a $16,000 tax deduction, because here's what happens. When your income drops, and that would put me in a lower tax bracket, which allows me to get a maximum $10,000 in child tax credit, because I have 5 children that I claim on my tax return at $2,000 each. So that's $10,000. Plus, I can get a $5,600 earned income credit, because I have earned income and I'm in a lower tax bracket because I bought the car. It put me in a lower bracket. It's super crazy. And then it saves me $40,000 in taxes. So by buying the Tesla, it literally saves me $60,000 in taxes. So it's like the government is giving me a Tesla. Not really, but, it makes me super happy to think like that. So, I had a financial planner that told me last year we needed to invest in some appreciable assets. And I was like, no, what we need to do is buy a Tesla. And I thought his head was going to spin off, and until I explained it. And he's like, oh, Courtney, I get it. And I'm like, man, I wouldn't have the 60 grand if I didn't buy the Tesla first. And it made total sense. So everybody needs to think like me. They just don't. So I'm sorry. I'm a little crazy about this stuff, but if you just understand and comprehend tax law, which I know sounds like it's not fun, but at the end of this conversation, you're going to realize how much fun it is to understand taxes. So the next one is probably one of my favorites, is hiring your kids. So kids are expensive. They have sporting events, they have dance, they have college, smartphones, they have video games. They want everything under the sun these days. And then they want vehicles. So, if you make them your employees and you buy them a vehicle, then part of the vehicle can be written off as a business expense. So there you go. I just threw that one in there. I hadn't even ever talked about that before, but I'm excited about that now. I need to buy another car. So we're going to hire them and they're going to pay for their stuff. So the first $12,000, they don't have to pay taxes on it at all, because remember we talked about that standard deduction. Everybody in America is entitled to $12,000 standard deduction. And so anything over that, they would have to pay taxes on it, but they're obviously going to be in a much lower tax bracket than you. So it's called income shifting. And so you can pay them $12,000. They don't have to pay taxes on it. You don't have to pay taxes on it, on any of the money that you pay them, because it's a tax deduction for you as a business expense. If they're under the age of 18, there's no FICA taxes that have to be withheld, meaning that you don't have to match the FICA taxes. There's no unemployment taxes that have to be paid, because they're not entitled to unemployment because they're your children. If they're over the age of 18, you can pay them still, but you do have to withhold FICA. But they're almost always is going to be better off to shift that income over to your children instead of you paying taxes on it. So instead of you paying for their college, let them pay for their college, and then you pay them a paycheck from there. So I have children that do bookkeeping for me. I have children that do social media for me. I've literally taught my 6-year-old, I will get her on Facebook and she'll hit the blue button. I'm like, hit the invite button, baby. Just hit the invite button. And she will just sit there and hit the invite button. And I can pay her for that. You can pay them for modeling. You can pay them to do all kinds of things for you. Shred paper. You can pay them I have one that does bookkeeping that is one of the best bookkeepers that I have. So, you can pay them to do things that you would pay someone else to do. One of the biggest things that my children do is they go along with me to events. Not only does that allow me time with my children, they get the personal growth and development that they need, but they also work for me and they help collect information. They help sell books for me. They talk to people for me. And so I'm helping them grow, but I'm also putting money in their pockets, and it's a tax deduction for me. So it's a win-win all the way around. Now, my favorite is social giving. So I believe that combining passion and profit, it just not only changes the world, but it changes the way people perceive you, and it changes the way I don't know. I just know that the reason why we're as successful as we are is because we give, and because we're doing everything that we can to help as many people as we can. And I know that Zig Ziglar said, if you help enough people get exactly what they want, you will automatically get what you want. And that should be your focus every single day. And if you're a nurturer, which a lot of people I'm sure on this call are, that means you just want to help people. I'm not telling you to create a nonprofit. I'm not telling you to give away all your samples. What I'm telling you is, if you help people understand how they can save money on their taxes, how they can get healthy, how they can feel better, how they can have a better life, and how they can make money, you're better off than just giving your product away constantly. And stop being a nonprofit. I love every one of you, but that's exactly what you do. So, so let's move on. So here's what I did in order to not only be able to combine my passion and my profits together, but it just made me want to work harder, is when I started providing whole food, plant-based nutrition to children in need all over the world. And my focus is medically fragile children that we feed right now in the United States. And so what we're doing is, for every dollar that comes in our accounting practice, we're providing a serving of whole food plant-based nutrition. So by giving from a gross income level instead of a net income, that becomes 100% tax deductible as a business expense. Otherwise, it would flow as a charitable contribution to my itemized deductions, and I would not get benefit from it, or the benefit would be minimal. So, it's super important for people to be able to understand that you can give, just like I said, you can give from your gross profit. You could give from every product that you sell. You could give from every person that joins your team. It just has to be part of your model. And now it becomes a cost of goods sold item, and it's no longer a charitable contribution. So here's what happens, is that since April the 15th of 2018, we've been able to provide 925,890 servings of food to children in need all over the world. And so that's been super exciting and been life-changing for us. And I've been able to take my family and my staff and teach them, look, we're not only doing tax returns for people, but we're changing people's lives. We're feeding children, and that helps them, that makes them work harder. So, take my advice, start doing something. I don't care what type of charity it is that you give to, but start doing it and you'll see what happens. Now, when you start making money, how do you keep more of your money? Here's what happens. So keeping more of your money allows you, so here's what we need to do. An LLC, you need an LLC. You would first register that with the state, whatever state you're in, you'd have an LLC. What that LLC does is it limits your liability, and it allows you to treat your business as one of two things. One, you can either be considered a sole proprietorship. The other, you can be treated as an S Corp election for tax purposes. What does an S Corp mean? An S Corp is one of the biggest tax deductions that you can have. And what it does is allow you to bypass the self-employment taxes almost completely. So you can bypass 80% of those. So if you're a W-2 employee, and you pay FICA, federal, and state taxes. And so if you are a business owner, what happens is you get the option. You don't have to pay all those taxes up front. As a W-2 employee, you would make your money, you'd pay the FICA, the federal and state taxes, and then what's left over you could take home. If you are a business owner, you make your money, you get to deduct all of your expenses, then you would pay federal and state taxes. And if you are not treated as an S corporation and are treated as a sole proprietorship, you would have to pay self-employment taxes of 15.3%. If you have this S corp election, which is beneficial if you make more than $10,000 a year in net income, meaning after expenses in net income, so it would be more beneficial for you to have the S corp election. So $60,000 in income times 15.3%, which would be the self-employment taxes, you would pay $9,000 in self-employment taxes, or you could have an S corp election and pay about $2,000 in self-employment taxes. So it's a huge tax savings. On top of this, guys, last year, the new tax laws implemented a 20% pass-through entity deduction, meaning that you get an additional 20% deduction in your income from your business that you don't have to pay taxes on, which is a huge deduction. So if you're a W-2 employee, you don't get to deduct that 20%. If you're a business owner, you get that 20% deduction. So it's a huge deal. Now, getting in summary, it's never been a better time to own a business. You need some sort of home-based business regardless, and you need to tell your friends. This business is for everyone. You can completely impact everyone's life just by sharing with them the tax savings alone. But then on top of that, the education around the health and the nutrition, and then the potential for them to make extra money. Take the deductions that you're entitled to. Do not let someone tell you that you're not entitled to certain deductions or that it could trigger an audit. It's just not true, guys. In 18 years, I've never had a home-based business owner ever audited, and 50% of my clients are home-based business owners. So if that were the case, I would have more clients that were audited. Hire your family. You can hire your spouse and your kids for even more additional tax savings. And then hiring an accountant. But I'm not telling you to just hire any accountant. If you're accountant, you have to argue with them every year on the deductions that you're entitled to. Do not hire that person or run away from them if they tell you you're not entitled to certain things. If they argue you down on why you should take deductions, don't utilize them because they won't help you in an audit. Also, don't prepare your own tax returns because that could trigger an audit because you are not answering the questions that we as tax preparers have to answer, to the tune of 30 questions saying that you have given us all the information that we need in order to prepare your return. If you're looking for tracking expenses, we have a great membership for that, and they can give you the information on that. At the end of this, I'm not going to go into detail on that, but you need to be tracking your expenses, because if you don't track those expenses, that's really the only way that the IRS can win, is that you haven't kept track of your expenses and know what you're entitled to. Now, here's my information. I know I threw a lot at you guys. If you're paying too much in taxes, if you're overwhelmed with bookkeeping, whatever that may be, if you think that you overpaid in prior years, we can amend those returns. We are a full service agency. Here is our book, More Relaxing, Less Taxing. And then I've listed here a $99 tax strategy session that you have access to that you can book. One of the things that I'll give you free access to is just a Facebook group. It's called More Relaxing, Less Taxing. I post a lot of content in there, and you can check that out anytime. Join that group. And, you know, I really appreciate you guys allowing me to be on this call. I'm sure I threw a lot at you that you've never heard before. And, you know, I'm super excited. You can tell I'm very passionate about freeing up money for people. In the last month, we've found about $700,000 that people have overpaid in taxes. And it's just the beginning. We're going to change the world with this. We're going to teach people why they got to be in home-based businesses, why they need to be in network marketing. And, you know, I'm right here alongside you guys, telling people that this is the better way. And, you know, I hope to see every one of you guys at GoPro. I'm speaking at GoPro Recruiting Mastery in December in Las Vegas. So, you know, I appreciate you guys having me on the call, and I'll answer any questions that you have.
Okay. So I just want to say thank you so